Viewers at home, you are welcome to the part 2 of my presentation on adjusted profit. Adjusted profit for tax purpose. This is a taxation class. In part 1, I have examined the computation of adjusted profit when you are starting with net profit as per account, net profit as per account, add taxable income not reported in account, taxable income not reported in account, less also net profit as per account, add taxable income not reported in account. You add non-allowable expenses reported in account. Then you less non-taxable income, non-taxable income reported in account. Then we also less the allowable expenses not reported in account. So after deducting this, you arrive at the adjusted profit for tax purpose. This method has been considered in part 1. In this part 2, I am going to consider the computation of adjusted profits, starting with taxable income. In method 2, computation of adjusted profit starting with the taxable income reported in account, and the taxable income not reported in account. Nonetheless, allowable expenses. You less your allowable expenses, the one reported in account, and the one not reported in account. That is, allowable expenses not reported in account. After deducting this, you arrive at the adjusted profit. So, for better understanding, before the same question I used in the first method will also be used as a work example in method 2, which I am about to consider. For better understanding, for those who have not watched the part 1 of my presentation on adjusted profit, I would like to consider the list of non-allowable expenses for tax purpose. Non-allowable expenses for tax purpose. So I'm going to examine this. I want you to know that For expenses to be allowable for tax purpose, it has to obey the Muren principle. The first W stands for wholly. R stands for reasonably. E stands for exclusively. And N stands for necessarily. For expenses to be allowable for tax purpose, such expenses must be wholly, reasonably, exclusively, and necessarily incurred for the purpose of generating revenue. Any expenses whose motive is not to generate revenue are not allowable for tax purpose. After that, an allowable expenses must be wholly, reasonably, exclusively, and necessarily incurred for the purpose of generating revenue. Meaning that allowable expenses are usually a revenue item. Allowable expenses, they are usually revenue expenditure. Revenue expenditure. Meaning that capital expenditure are not allowable for tax purpose. The list of non-allowable expenses include: number 1, depreciation. Depreciation is not allowable for tax purpose. Depreciation is an accounting derivative. Depreciation. No, let me say no cash items. No cash items such as depreciation, amortization, impairment loss, loss on disposal of an asset or non-current assets. These items are not allowable for tax purpose. Number 2, we have capital expenditure. Capital expenditure. Any expenditure that adds to the value of the existing asset, or expenditure that involve acquisition of non-current assets, then disposal of non-current assets, or expenditure that will improve the existing assets. Those expenditures are said to be capital items. They are not allowable for tax purpose. Number 3, general provision. General provision for bad debts. General provision for bad debts are not allowable, but specific provision are allowable. In case you are given provision for bad debts, just know that it is general and that provision is not allowable. But bad debts written up is allowable for tax purpose. Don't confuse your bad debts written up or your bad debts with provision for bad debts. Provision for bad debts are not allowable. General one is not allowable, but the specific provisions is allowable for tax purpose. Any contribution to unapproved pension and providence fund and provident provident funds. The one that is not approved, unapproved ones, are not allowable for tax purpose. Then we have fines and penalties. Fines and penalties. Fines and penalties are not allowable for tax purpose. Then we have income tax provisions. Income tax provisions. Income tax provisions are not allowable. Pre-operational expenses. Pre-operational expenses or preliminary expenses. Preliminary expenses are not allowable for tax purpose. Then we have any sum recovered from insurance company. Sum recoverable from insurance company are not allowable for tax purpose. We have appropriation of profits. Number 9, we have appropriation of profits. Appropriation of profits in form of dividend paid or proposed. Dividend paid or dividend proposed are not allowable. Transfer to reserve. Transfer to reserves is not allowable. Even general reserves. General reserves or reserves in whatever form, they are not allowable for tax purpose. Number 10, we have donations to unapproved bodies. Donations to unapproved bodies are not allowable for tax purpose. Number 11, we have legal fees. Please, to learn more on donation to unapproved body, go through your study test and go to find out the list of the approved bodies. Legal fees. Legal fees. Cost of acquiring a new lease. Legal fees are not allowable. Any cost of acquiring a new lease, that is legal costs or incur in acquiring a new lease, are not allowable. Cost of renewing a long term lease are not allowable. Cost of defending a traffic offense. Cost of defending a traffic offense are not allowable for tax purpose. Then we may also have cost of tax appeals. Cost of tax appeals. Cost incurred in appealing to tax authority. Cost of tax appeals. They are not allowable. Stamp duty on increase in share capital. Stamp duty on increase in share capital. All these costs are not allowable for tax purpose. Now, we also have non-taxable income. Non-taxable income. Non-taxable income. We have profits from disposal of PPE, property, plant and equipment. 2. Profit from sales of investment. All these income are not taxable in the hands of the recipient. Having examined the list of non-allowable expenses and the non-taxable income, we therefore want to take a work example. Muhammad Limited has been in business for many years and makes up accounts to November 30 annually. The income statement contains the following for the year ended November 30, 2021. We have gross profit of 1,230,936. Miscellaneous income 31,440, and total income is 1,262,376. We have salaries and wages 251,240. Electricity and other utilities 19,260. Rent and rates 145,080. Repairs and renewals 40,920. Motor vehicle expenses 130,140. We have depreciation of 171,300. Interest and bank charges of 21,120. Bad and doubtful debts 40,540. Miscellaneous expenses of 44,840. Legal and professional charges 30,900. Pension contribution employers 38,240. Audit fees 34,400. Donations and subscriptions 37,200. Directors' emoluments 36,000. The total of all the expenses is 1,047,180. After all the expenses have been deducted from the income of 1,262,376, we have the net profit to be 215,196. Net profit 215,196. You are given the following additional information. A. Bad and doubtful debt figure consists of 1. General provision 12,000. 2. Specific provision 27,100. 3. Bad debts written off 6,500. 4. Bad debts recovered 5,060. B. Defalcation and embezzlement. A director defrauded the company to the tune of 40,000 naira. The other embezzlement were committed by junior staff. C. Miscellaneous income includes profit on disposal of property, plant and equipment 8,690. D. Legal and professional charges include 1. Debt collection 6,000 naira. 2. Renewal of short leases 2,400 naira. 3. Defense for traffic offence 1,500 naira. 4. Land acquisition 15,000 naira. 5. Retainership fee 6,000 naira. E. Miscellaneous expenses comprise 1. Court fines 2,400. 2. Exchange loss on translation of intercompany balances 25,140. 3. Exchange loss on remittance 6,500. 4. Office expenses 10,800 naira. F. Donation and subscription comprise 1. Lagos Chamber of Commerce 3,000 naira. 2. Motor Boat Club 1,200. 3. Polo Club 1,000 naira. 4. Political parties 30,000 naira. 5. National Relief Funds 2,000 required. Compute adjusted profit for the relevant assessment year. That is the question. This question is obtained from the study text of the Institute of Chartered Accountants of Nigeria, ICAN Advanced Taxation. Now, the solution. The name of the entity is Mohammed Limited. Computation of adjusted profit. For 2022 year of assessment. I've told you that in this second method, you are going to start with taxable income. Taxable income. The taxable income reported in the account and the taxable income not reported in the account. Our taxable income include a gross profit of 1,230,936. So gross profit of 1,230,936. Then we also have miscellaneous income 31,440. Miscellaneous income. Let me have that as working one since there are notes on that. So in note C, miscellaneous income includes profit on disposal of property, plant and equipment of 8,690. We said profit from disposal, we said it's not taxable. So you are going to exclude that from miscellaneous income. Working one, miscellaneous income. Balance as per income statement. The miscellaneous income as per income statement is 31,440. 31,440. From this, you less profit from disposal of PPE. Note C. And that amounted to 8,690. 8,690. If you subtract that from miscellaneous income, Remember, profit from disposal of PP we say it's not taxable. 31,440 minus 8,690. The amount that will be taxed from the miscellaneous income is 22,750. 22,750. 22,750. And these are the taxable income we have. So by the time you sum it up, the total taxable income amounted to 1,253,686. 1,253,686. Now, from our taxable income we less allowable expenses. Allowable expenses, both the one reported in the account and the one not reported in the account. Now, the first item we have is salaries and wages. Salaries and wages, there is no note on that, so we pick that. 251, 240. Salaries and wages, 251,240. Then we also have electricity and other utilities of 19,260. There is no note on that, no additional information. Electricity and other utility, 19,260 is allowable. Rents and rates, 145080. There is no additional information on that. Rent and rates, and that amounted to 145,080. Then we have repairs and renewals. It's also allowable. That amounted to 40,920. Repairs and renewals of 40,920. Then we also have motor vehicle expenses. Is allowable. It's a revenue item and it's allowable. 130,140. Motor vehicle expenses, 130,140. Depreciation is not allowable, so that should be ignored. It's not allowable, it should be ignored. Interest and bank charges is allowable, 27,120. Interest and bank charges of 27,120. Then we have bad and doubtful debts. Bad and doubtful debts. Bad and doubtful debts. They have that at working too, since there are notes on that. So, working two, bad and doubtful debts. Balance as per income statement. The bad and doubtful debt as per income statement, and that is 40,540. That is the bad and doubtful debt as per income statement, 40,540. 540. 40,540. That is the total. Now let's go through the note. Note A. Bad and doubtful debt figure consists of general provision. General provision is not allowable. Then specific provision, that is allowable. Bad debts written off is allowable. Bad debts recovered is a taxable income which have been reported. So the only one that is not allowable is the general provision of 12,000. So we let the general provision for bad debts of 12,000. So you remove that from 40,540. 40,540 minus 12,000. Then you have 28,540. 28,540. That is the amount that will be allowable for tax purpose. 28,540. Now, after bad and doubtful debts, we have miscellaneous expenses, 44,840. Let me have that as working theory. Miscellaneous expenses of, so we have balance as per income statement, and that amounted to 44,840. 44,840. Down. Now, note E. We have miscellaneous expenses comprise. The first item is court fines. Court fines is not allowable. Let's remove those items that will not be allowed. Court fines, and the court fines amounted to 2,400. 2,400. That is court fines. Aside the court fines of 2,400, we also have exchange loss on translation of intercompany balance. That is 25,140. It's not allowable for tax purpose. We also remove that. Exchange loss on translation of intercompany balance of 25,140. These items have been included in the miscellaneous expenses, and that is why we are deducting that. Then exchange loss on remittance, that is allowable, so we ignore that. Office expenses is allowable, so we ignore that. These are the items that will not be allowed for tax purpose, which have been included in miscellaneous expenses. So now 44,840 minus 2,400 minus 25,140. The amount that will be allowed for tax purpose will now be 17,300. 17,300. So we have miscellaneous expenses, miscellaneous expenses. That is working 3. That is 17,300. 17,300. Aside miscellaneous expenses, we have legal and professional charges of 30,900. Legal and professional charges. Let me have that as working number 4. Legal and professional charges. Working for legal and professional charges. We have balance as per income statement. Balance as per income statement, that is 30,900. Then in the footnote, the note D, legal and professional charges include debt collection is allowable, renewal of short lease is allowable, defense for traffic offence, that is not allowable. So now we remove that, the one that is not allowable, defense for traffic offence. The amount spent on defense for traffic offence is 1,500. So we remove that, minus 1,500. Then we also have land acquisition. That is a capital expenditure. We also remove that since it is not allowable. Land acquisition of 15,000. 15,000. Then retainership fees is allowable. So meaning that the amount that will be allowed for tax purpose from the legal and professional charges will be 30,900 minus 1,500 minus 15,000. Then you have 14,400. So now legal and professional charges of 14,400. After legal and professional charges, we have pension contribution. That is that of employer. Pension contribution is allowable for tax purpose, and that amounted to 38,240. 38,240. Then we also have audit fees, 34,400 is allowable. There is no note on that. Audit fees, 34,400. 34,400. Then we also have donations and subscription. Donations and subscriptions. Legal and professional charges, that is working for. So donations and subscription, let me have working 5. Donations and subscriptions. So we have balance as per income statement. As per income statement. The donation in the income statement, and that is 37,200. 37,200. From this, we deduct those donations granted to unapproved body. Now, note F. Note F. Donations and subscription comprise Lagos Chamber of Commerce. Is one of the approved bodies, so we ignore that. Motor Boat Club is unapproved. So donation to Motor Boat Club, and that amounted to 1,200. We remove that. It's not approved. Then we have Polo Club. Donation to Polo Club, that is 1,000. It's not approved. Polo Club, 1,000. It's not approved. It's not among the list of approved body. Then we also have political parties, 30,000. It's not among the list of approved body. Political parties, and that amounted to 30,000. Then we also have national relief funds, 2,000, and that is among the list of approved bodies since it is approved, so we ignore that. So now when you deduct the donation granted to unapproved body, we have 37,200 minus 1,200 minus 1,000 minus 30,000. then you'll be left with the balance of 5,000. That means the donation granted to an approved body is 5,000. That is working 5. So working 5,000. Then we have directors' emolument. Directors' emolument of 36,000 is allowable. So we have directors' emolument of 36,000 is allowable for tax purpose. Now, having considered all the items or expenditure in the income statement, let's go through the notes to see if there are anything that ought to be considered. The first item in the note is bad and doubtful debts, and that have been considered. Depreciation and embezzlement. There is no depreciation and embezzlement in the income statement. You were told that a director defrauded the company to the tune of 40,000 naira. The other embezzlement were committed by junior staff. This depreciation is not allowable for tax purpose, and it have not been reported in the account. That is to show that this is not allowable expenses not reported in the account. Since it has not been reported in the account and it is not allowable for tax purpose, so we ignore that under this method. Miscellaneous income have been considered. Legal and professional charges have been considered. Then miscellaneous expenses have equally been considered. So donations have equally been considered. Now, you now sum up all the allowable expenses, less allowable expenses. Now, what is the total? 251, 240 plus 19,260 plus 145,080 plus 40,920 plus 130,140 plus 27,120 plus 28,540 plus 17,300 plus 14,400 plus 38,240 plus 34,400 plus 5,000 plus 36,000. The total of all allowable expenses is 787,640. So by the time we deduct the total allowable expenses of 787,640 from the total of our taxable income of 1,253,686, then we have the adjusted profit of 466,046. That is our adjusted profit. This is the end of the part 2. In my next presentation, I will consider the computation of capital allowance. Thanks for watching ICAN.